This is the first Zcash red here, and it arrives with a 47-fold run behind it and a giveback parked on the golden ratio. Start on the weekly because the whole story of this asset is one continuous line. The lowest print on this chart is $15.78. The highest is $750. 70 weekly candles separate those two prints, roughly 16 months, and the advance between them measures 47 times over. Very few charts on any exchange carry a leg of that size inside a 2-year window. What followed the record took 3/4 of it away. 13 weeks after the high, the tape was down at 184.57, a 75% drawdown, and that is the number a first look has to see before anything else on this chart. Then it came back, and it came back almost all the way. From that low, the market rallied 274% up to 690, which returns 89% of the fall. A retracement that deep is legal for a correction and equally legal for a fresh advance. So the weekly degree names no side here. What it does name is the level that broke it. One weekly candle did most of the damage. It opened near 569, printed 644, then traded down to 250 inside the same 7 days. The floor that came out of the wreckage is 368.03. That weekly floor is not arbitrary. It gives back 64% of the rally off the low, $9 past the golden shelf at 377.64. And it is exactly where the hourly window opens. So drop to the hourly and stay there for the rest of this. Of 368.03, the market added $221 in just under 400 hours, a 60% advance. Now test it as a 5. The first leg runs up to 476.34, and the pullback that follows stops right at 437.73. That pullback holds $69 above the origin. So the first hard rule passes. A second wave may not travel past where the move began. The third leg then runs to 549.81, and the fourth stops at 490.40. The fourth wave sits $14 clear of the first leg's top, so there is no overlap at all, and the third leg at 112 is longer than the first at 108 and the fifth at 99. All three hard rules pass. The second wave gives back 36% of the first, the fourth gives back 53% of the third, so the alternation guideline is satisfied as well. And here is the honest problem with it. The longest of those three legs is only 1.13 times the shortest. Nothing extends. The guideline expects one of the three to run away from the others, and none of them does. Which is why the same tape reads the second way. Take it as 3 legs rather than 5, up to 476, B down, then CA up to the high. Measured out, C is 1.40 times A against the 1.38 a zigzag expects. Both readings are legal. A 5 says the high was a first wave and looks up from here. A finished 3 says the high was the end of the move and looks down. The structure does not choose between them, so the levels have to. From 589.18, the market gave back 62%, down to 451.75. The golden shelf computes at 452.51. 76 cents through it, and then it turned. 58 hours later, a second low printed 54 cents higher, and across the 219 hours since, not one print and not one close has gone below that first low. The decline into it never looked impulsive either. 26 confirmed swings, each one trading back into the one before it. Off the second low, the rebound gained 16% to 525.90, then gave back just past half of that, which leaves price at 502.61, wedged between the two averages, the 20 under it and the 50 over. This morning's high tagged the 50 by 39 cents and closed back beneath it. The map is short. Over 525.90 this becomes more than a bounce, and under 451.75 the shelf fails. Educational analysis, not financial advice. If this discipline belongs in your feed, subscribe, leave a like and share it with one trader.